Welcome to the stream.
All right. Hello, everybody. Boy, I tell you, man, a lot of pretty unhappy Jets fans this morning.
Yes, that's a big that's a big bunch of money to lose.
Dude, that team is just cursed, man. It's really. I was like, at this point, I'm like rooting for them, It's like, God,
I can't.
at fourth play of this. So anyway, for those who didn't watch, Aaron Rodgers is the big superstar that was supposed to come in and save the team. We've been hearing about it for 6 months every day, and now the guy comes in and on the fourth play he gets an injury that looks pretty bad, and they're even saying that he might be out for the season.
Holy cow.
So I mean, if you look here, it really doesn't look that bad.
You got to show
I guess that is kind of bad. Oh yeah,
you're not sharing.
Sorry about that. I know that would help. Yeah. So anyway, I mean, well, I guess, but you think these guys would stretch a lot, but I guess it's just the Jets.
You know what though? He's old, man. He's played a long time, and that ankle's been used quite a lot. So I mean, it's those tendons get stretched, and then after that, it is what it is.
You got to be kidding, man. Biden claims he was at Ground Zero. Biden said Monday that he was at the World Trade Center site in New York City one day after. No, he wasn't. Despite his own autobiography placing him in D.C. Ground Zero, New York. I remember looking at the building, and I felt like I was looking through the gates of hell. I guess he could just say he was looking at the Pentagon. No, but actually he says New York. Boy, I don't even know what to say about that. I mean, come on, dude. It's like you write in your book.
I don't think you can say anything anymore, Mark.
It shows he's a pathological liar. I mean, he really is. All right. Anyway, let's see what's going on in the market here. Let's see. Usually what I like to do is just look at the headlines first thing, see if there's anything major or important going on, or things that could become tradable. All right, 5 things to look for. Okay, so we got the Apple iPhone event today. Looks like they're going to release the 15, which I don't even really care about, frankly, but I do care about their stock. So let's go take a look. All right, so this morning it's really doing nothing in the pre-market. I guess I could kind of get rid of some of this stuff here. So now if we're looking to trade this thing, right, what you want to do is look where the prior peaks are, and look where the prior peaks and the prior valleys are. So here, if I was trading this, I would be looking for some resistance up around here. So you see this low at around 183. Let's see here. So that's one level I would look at. And of course, this isn't perfect. It's not science. It's more of an art. But the idea is that there's people who bought here on the close this big day here, this big down day where we're down 3.5%. You got people that came in and they're like, "Oh man, this stock is so overdone. I'm going to go in there and buy it. Oh, I got it near the lows of the day. I did a good job." Then the next day it continues to go lower. So now I got a lot of people who bought up here who are just like, "Man, I got to get out of this. If I can get out of break even, I'm going to." So there's going to be people that bought here that are going to be trying to sell over here. So that's the 183 level. Then on the downside, I would be looking for support around here. Now, why would there be support here? Well, there are probably people who sold who regret their decision to do so now that the stock is up a few points from there. It's up about 5 points. And they're going to say, if I can buy my shares back, I'm going to. But I'm only going to do it if I can get them at the same price I sold them at. So you got potentially resistance here and potentially support here. So actually, these are pretty round levels, right? Let's see, is this 183? So I would say 183 on the upside and 175 on the downside. So that's where I would be looking. Now, usually these event things, maybe they could cause some short-term volatility, but I don't think they're really game changers, at least none of the recent ones. But we can see here a really good example of how we gap down, then we gap back up, or we get the fast move up, then we get the fast move down, then we get another gap. So for whatever reason, in this particular area here, and I would say like in here, this particular stock just doesn't like these price levels as much as it likes other ones. That's why it spent less time at them. Like look up here, we spent from June 30th through August 3rd trading right around 193. So that was an important level for a long time. These levels we just kind of blow right through. The best YouTube channel about the stock market. Yeah, Amy, thank you. Tell your friends, man. We're trying to get a following and get a community built. But the problem is on YouTube, there's just so much garbage. I mean, it's really some of that stuff I would be embarrassed to put out, frankly. Actually, most of what I've seen. All right, let's go look at the market here and see what we got going on. So the S&P had a fairly decent move yesterday. Now, it's not surprising, right? We thought that there would be support and maybe a little bit of a bounce off this level here. So you got people who sold, like we saw. They might want to buy their shares back here. Then you get people that want to buy and they notice the market's not going down anymore. And it's like, well, markets go down because there's not enough buyers. When the market stops going down, there is enough buyers. So some of the traders notice, hey, this market's not going down anymore. That must mean there are other buyers coming in. I better go out there and raise the price I'm willing to pay because I don't want any of these buyers cutting ahead of me. The seller's going to go to whoever willing to pay the highest price. So you could come in and say, all right, well, I want to pay $443.50 for shares, and someone else might see that bid, come in and be like, you know what, I'm going to go to $443.75, and you get this bidding war, and it drives the price higher. So a lot of times when you get to support, you see these bounces, and that's why. It's because of the psychology. You have anxious buyers, and when you come off of a resistance level, it's the opposite. People want to sell, and they notice those price isn't moving any higher. Right? Prices move higher because there's not enough sellers. And these traders notice, oh, the price isn't moving higher anymore. That must mean there are new sellers coming into the market. So I better go out there and reduce the price I'm willing to sell because the buyers are going to go to whoever has the lowest price. I was at 452. I'm going to go down to 451.5. Then someone else might see that and say, I'm going to go down to 451 and so forth and so on. All right, so that's our S&P. So this morning we're pretty much down to about there. We got the CPI tomorrow. I think it's going to be higher than estimated. And I can't believe Biden would lie about being at 9/11. Jesus, like what the hell? As a matter of fact, I have a picture in my office here somewhere of all the people that were there. It's got George Pataki, Giuliani, Chuck Schumer, even. And of course, Hillary Clinton was too tired. She didn't show up.
Barney Frank?
Well, he's not a New Yorker.
Oh, Barney wasn't?
No, he's Massachusetts, I think.
Oh,
or is he? No, he's New Hampshire. Yeah, no. Oh, actually, no. Barney Frank. Yeah, no. He was a New York representative. No, I don't remember seeing him there, but he would have been there. He was probably there if he was in power at the time.
Barney was all over everything.
Oh man. Well, I don't want to take that joke. All right. Slobbering away.
Oh my goodness, was he nasty?
But dude, it's like, let's just take a breath here and think about this. So you are the president of the United States. You write in your autobiography that you were in Washington, D.C. after 9/11 happened. Then you say in a speech 22 years later, I was in New York looking at the towers the day after. It's like, why do you lie about stuff that's so provably false? I think it's just hubris, or I don't know.
I think it's just because he's senile, and he just wants to make himself. He's trying to portray himself to be more than he actually is, because he sees things like what happened at that Iowa State Iowa State football game with Trump. Man, you couldn't get. There were so many people that it looked like. I mean, it was like a sea of people. It was ridiculous. The amount of people standing
out. Lie about something. Lie about something that's not demonstrably false. You know what I mean?
Yeah. Well, Mark, I can one up that one for you. Did you hear about the deal with Iran for the prisoner exchange and the $6 billion?
Yeah. On the day 9/11.
Here's the thing: they're on the sanctions list, and we're going to send the money to South Korea so that it can go to Qatar, and then it can go to Iran, because we're going to subjugate our own sanctions list.
Yeah, it's pretty bad, dude. Especially because if you read the 9/11 report, a bunch of the terrorists on 9/11, they were in Iran the year before, so they were probably getting training. But anyway,
None of it
so
makes
tech is
sense.
looking down a little bit this morning, and this is kind of the same thing here, where see what happens. Like where do markets turn? Well, they turn when they get to important price levels. So we go down here, we get to this level that's important, going all the way back to December of 21. So this is 163.50. All right. So December of 21, support, February and April of 22, resistance. Then June of this year, support. Then it becomes support again. So how is it possible that this particular price level stays intact for so long? And it's kind of mind-boggling, and it's hard to believe if you were to just sit there and think about it. But I mean, clearly it happens, and it happens because of the fact, or it happens because human psychology creates important price levels, right? So we don't know why there was resistance here, but we know why there was support here. And we don't know why there was resistance here, but we know why there was support here. And this is because resistance turns into support. And you get the same stuff I was talking about before. You get to resistance and you tend to sell off because you get anxious sellers undercutting each other. And you get to support and you bounce because you get anxious buyers outbidding each other. It's kind of like on a storage wars when they're bidding for something, right? It's like
Hmm.
they don't do any
Microsoft's down $2 this morning, 2.5.
they don't do any selling. All right, so that's a big part of why this is down. Then what happened here? 356. Yeah, I mean, I don't know. It's down, but it's still
Early.
and it didn't give up all of yesterday's gains. So all right, so let's see. Let's go take a look at our healthcare sector. Now, this is probably going to be some trades on the short side coming up here if this level here doesn't hold. All right, now you got to remember this is the scale here. It looks bigger than it is, but this is 132.50, and we closed at 132.97. So if after a couple days this level doesn't hold, this thing probably moves down to here. But I guess that was kind of a decent move, but something to keep an eye on. Now, I think the most important thing we got to really watch, and different things are in the driver's seat at different times, I like to say. If you look at the sectors for the S&P, which we are going to do right now, there are 11 sectors. All right, so here's tech is the biggest. You can actually see down here. Now, materials, utilities, real estate, they don't really affect the broader market because they're such small percentages. But energy, even though it's only 4.5%, energy could affect the market. Consumer staples is kind of interesting to watch because sometimes money flows into here before the market goes lower. It's your classic flight to safety. And then at various times, these different sectors are in charge. So right now, I think probably the most important thing to watch is the financial sector because we're pretty much teetering right on this important price level here. So I got 34.32 written down here, and it's at 34.38 in the pre-market. So what's going to probably drive this is what's going on in the banking industry. So you have the sectors, and the sectors are made up of the industries that are within the sector. And as we can see, this is hanging out right on this important price level here. So this is KBE. This is the banking ETF. So it tracks the industry of banking. So we got resistance, and we get to resistance, and we get the sell-off, resistance, and we get the sell-off. Here the support broke, but we came back and notice how what was support became resistance. Then it became support again. So resistance, and it turns into support. So this is like if there was like one thing to focus on in the market to kind of get an idea of where we might go, I would probably say it's this. Because if this support starts to give way, we could make a pretty rapid move lower down to, probably back right down to here. Now, why would this happen? Well, what is support? We have to ask ourselves. Support is this large group of buyers or large group of traders that want to pay at or close to the same price for shares. In this case, it's $38. Now, if this breaks, meaning if we get below it, that tells us something. It tells us that the investors or the traders who um, created the support are out of the market. So when you are out of the market, when you take demand out of the market, then the sellers have no choice but to push the price lower. Um, yeah, I could explain ascending and descending triangles. Most patterns I don't really like agree with, so I don't really talk about them for various reasons. I mean, I guess you could say that this is a kind of an ascending triangle, not a perfect one. Let's go look at some good ones. So I know in the healthcare sector there was one not too long ago. All right, so this here is your classic descending triangle. So this was from April through May. So what happens here is this, you have to ask yourself, what does this price action illustrate, right? These are all trades, obviously. So what is this action kind of showing us? Well, you got this support level down here, okay, and the buyers who are at the support level are content with staying at the support level. They're buyers, but they're not really super aggressive. They're kind of like, all right, well, if the shares come to me, I'll buy them. If not, I don't really care. At the same time, you got the sellers are getting more and more anxious and more aggressive. And you can tell that's the case because you have lower highs. Markets go in peaks and valleys. And when the peak forms at a lower level than the prior peak, we call that a lower high. So lower high than here, lower high than there. So what does this formation tell us? Well, it tells us we got complacent buyers who are okay with just kind of hanging out. And we got aggressive sellers who are getting, as time goes by, they're willing to accept lower and lower prices. I mean, here, the lowest anyone would sell for was 135.60. Here, people are selling for 134. There's another one, I believe, in the utility sector. Yeah, so let's just look at this. So this is another classic descending triangle pattern. And what do we have? Well, you have this peak is lower than this one. I guess this one's not really as perfect though, because you got this lower high in here, but still, it's the concept of, all right, the buyers are hanging out down here, the sellers are getting more and more aggressive. So we get aggressive sellers and complacent buyers, and it sets the stage for the market to move lower, regardless of what what any product. If you have aggressive sellers and complacent buyers, it's gonna set the price to go down. So like just think about like in Pawn Stars, if someone comes into the shop and they really seem like they are really anxious and they really want to sell what it is they got to sell, well then they're going to get a lower bid. But if they come in and they're just like, yeah, all right, well, if I sell it, I sell it. If not, I don't. Well, if they know that the pawn shop people know that they can turn it around and make a profit, then maybe they pay a higher price. So they're reading the seller's psychology. Now here you got your descending triangle. See, we got our flat support level here. So this shows us our buyers are hanging. And then you get the sellers are becoming more aggressive as time goes by here. So this is October of 21, and this is November. So people here were selling at 630, and here they're selling at 5.5. Now you have the ascending triangle, which this was kind of an anomaly. See how it was a false breakout? It came right back. So if you pretend this isn't here, then this would be like a really classic ascending triangle. But it doesn't matter if it fits the textbook picture. What we want to look at is the dynamics. The buyers are becoming more aggressive. Here we have higher lows. So to notice how the valley is forming at a higher price level than the prior valley. So this valley is higher than this one. This valley is higher than this one. This is higher than this. And this is higher than this. Meanwhile, you got your sellers are just kind of hanging out around 485. So you have complacent sellers and aggressive buyers. So that's what the ascending triangle pattern shows. So if you understand the logic behind these patterns, they're pretty easy to kind of pick out. A lot of people, they like they look at charts and they say, oh, is this this pattern? Is this that pattern? But they don't really understand what it is that they're looking at. So here, see, we get to support, we rally, get to support, rally. This is natural gas we're looking at here. Get to support, we rally. I mean, how is it possible that the natural gas market, which is so big, trillions and trillions of dollars all around the world, can get to these precise price levels and change? Can we use the moving average? Some people do. I generally don't. I would say there's probably minor support and resistance at moving averages. So let's take a look at a moving average. I mean, a lot of trading systems are based on the concept of the moving average crossover. So I'm just going to go with the simple moving average. So anyway, so this is the 9-day. And I don't know why they use 9 days as their default. Seems like a pretty strange number to me. Usually people have like 10 days or 20 days, because if you get really into it, it's like moving averages are supposed to be like these cycle things, and 9 days is not 2 weeks. 10 days would be two weeks, and 20 days would be 4 weeks. So and I mean, it's the kind of thing where if you go backwards, it's like a self-fulfilling prophecy. It's like, oh wow, look at that. Hey, there was support here.
Yep.
But I mean, there's a lot of times where there isn't. Moving averages are a backward looking number. The way most people trade is that they have a crossover. So I'm going to put in another one. Moving average, simple, and we're going to make this. I'm going to make this an 18-day just because it's twice. So here this one here would not have been that effective, but the idea is that you buy if the shorter term moving average, the 9-day, crosses above the longer term, then that's your buy signal, and if it crosses below it, that's your sell signal. Now, the good thing about moving averages is they catch these long-term trends, but if you go in a sideways market like this, you tend to get whipsawed. You get a lot of false signals. But I mean, I would say maybe there's some minor support or resistance at the popular ones, like the 50-day is pretty popular. Let's see what that looks like. But I mean, like if you look here, someone might say, "Oh, well, look at that! It was perfect support right there." Well, it wasn't support over here or here. So yeah. So I guess sorry for going on a 9 and 21 day. Let's try that. So I would say, yeah, there's probably minor support or minor resistance at moving averages, but I would pay more attention to the trends and the levels. So let me see here. Moving average, simple. So that's the 9, and that's the 21. Now, why are these numbers important? I mean, I don't know. I guess they're just, I don't know, maybe in fashion or in vogue. So here, the idea is you would sell here when the short term crosses the long term. Think about it, right? If the simple moving average is the average closing price of however many days. So if you have the 9-day simple moving average, that's the average closing price of the prior 9 days. And the 21-day would be the average closing price of the prior 21 days. Now, if the average closing price of the shorter term is higher than the longer term, you can make the assumption that the market's moving higher. And if the shorter term is lower than the longer term, you can make the assumption the market's moving lower. So your sell signal is when the shorter term crosses the longer term, and your buy signal is when your shorter term crosses up through the longer term. But as we can see here in this natural gas example, this would not have been effective. There probably are moving averages that would be. Let me just try the 10 and the 20-day are pretty popular too. So let's see. Well, actually, that would be too close. Let's go with 10-day and 50-day.
Obviously, got another question too, Mark. Can you use that as confirmation?
Well, I mean, there's really no 100% percent defined rules in the market. Um, so I'm not sure in what sense you mean. Let me see if I can use it. We can use it for confirmation. Well, I mean, I guess yes and no. You're never really going to have anything confirmed because it's just not the way markets work. But like a lot of traders who don't want to worry about like using trend lines, they use moving average crossovers because a trend line is subjective, whereas a moving average is not. And the reason why people like these moving average strategies is because they're very, there's no questioning them. It's like, all right, well, hey, it crossed over. This is my sell signal. This is my buy signal. I don't think students use textbooks anymore. I mean, my daughter's reaching college, and my daughter Lila has one book.
Yeah, but they charge you just as much for the digital stuff as they do for the paper. It's a ripoff.
Yeah, it just seems very, very bizarre. All these kids sitting around on their phones claiming they're doing homework. But now look at this. See, the moving average system catches these long trends. So you would have sold up here, and then you would have bought back down here. But then when you go into these sideways markets like this, you would get like whipsawed a lot. So here someone who likes moving averages could just say, hey, look at that. There's support at this moving average, and there's resistance up here. But I don't know. It's not your traditional. Like if you look in here, I don't see any discernible patterns in here from this moving average. All right, so let's see what else we were talking about. XLC is our communication services sector. The thing about moving averages is I always say that on Wall Street, there's a lot of people walking around trying to raise money because they have these good results on paper, like a paper trading system or back testing. And moving averages are very easy to back test. As a matter of fact, if you look up in here, you get all these strategies, which I've never really figured out how to use. But you could say, all right, if I do this moving average strategy and I have the 9 and the 18 day, well, going back to whatever this says down here, you can get okay, well, we had 75 trades, about half were profitable. But anyway, you can finagle these numbers and you find a moving average that really works. So maybe we change this to, I don't know, 10 and just pulling numbers out of the air here, 40. All right, so now you can say, all right, well, hey, we made a profit. Here's our drawdown, here's this or that. But here's the thing, right? Someone might be like, oh, I've identified this great system that works on this particular market. But when they go to actually deploy it or use real money, then they get the psychological hangups. Oh, well, my moving average says I should be selling, but it's going to be for a loss. So I think this time I'm going to, break my rules. And so if you don't have real money involved, you don't really experience the emotions that it takes. So that's why you got all these people going around with all these paper trading models. But if they try to actually put it into play, it's like they have a hard time being successful. So one time, like this guy came and he was like some big guru, statistics, financial science PhD, and he comes in and he's trying to raise money to manage because money managers get paid off fees by managing other people's money. And he has this model, and it's like the returns are really good. And the guys who I work with were like, oh, wow, this looks really good. So me being the trader, I'm like, something ain't right here. It's like, there's no way this thing could be that good. So I start looking through the stocks, and he had this particular guru genius who came up with this system, never bothered to factor in the liquidity, how many shares trade. So there he had the program buying stocks that literally only traded 100 shares a day or 200 shares a day. Some of them didn't even trade every day. And I said, there's no way that this could ever be implemented with real money because there's not enough liquidity on a lot of these things. So we tell the guy this, when we explain it to him, and he's like, okay, I'll make some changes, then I'll come back to you. And it's like, we never heard from the guy again. So I kind of feel bad for the guy, but hey, if you're designing a trading model, you gotta take in mind how many shares trade, because if you're buying more than a third of the volume, you could really influence the price. All right, let's see. So this is communication services. This is one of these sectors that's dominated by Google and Facebook. So, all right, consumer discretionary trading down a little bit. See, coming off of this resistance level. So this is where we run into resistance at a level that was resistance before. So I'm going to say that's 174. So we got up there yesterday, and then today we're selling off. So it's not a coincidence that this is where this move higher ended. All right, so that's that. I guess we can look at the industrial sector. And now look at this, right? Where did we find support? It's not a coincidence that this is where this sell-off stopped, at least for the last 3 days. It's at the level that was previously support.
So, Mark, before you had these spider ETFs, there was no correlation like this, so where you could actually pick stocks. Well, I mean, I guess you knew the individual securities, but you wouldn't know the actual ones that would move a sector because the sectors didn't exist. Does it make trading easier now because of these spider ETFs?
Yeah. Well, the sectors didn't. The sectors existed, but the ETFs didn't exist yet. So ever since the emergence of ETFs, it's caused the sectors to be much more correlated. Gotcha. So in the old days, a sector was correlated, but not as much as it is today. And I think it's made our job a lot easier. I mean, as traders, I mean, look at, well, first of all, you get exposure. You can get pretty much exposure to anything in the ETF market. But I mean, look at that. Like, how is it possible that this sector, which is worth trillions and trillions of dollars, like just has this perfect support level? Now, if you go through a lot of historical charts, or you read some of the great technical analysis books from the old days, you see support and resistance, but you don't see it with this precision, at least most of the time. I mean, this is really uncanny if you think about it. So this line is, we're going to call this 105, and I guess we'll make it 60. All right, so yesterday's closing price was 105.66. This day's closing price was 105.63. This day's closing price was 105.65. This day's low price was 105.61. I mean, if you really think about it, it really kind of boggles the imagination, because you would say this industrial sector is worth trillions and trillions and trillions of dollars. How is it possible that it has the exact same valuation on September 11th, 2023, as it did on June 29th, 2023? I mean, how is it possible? Think about what's changed. And even back here, the same exact valuation as December 30th of 2021. And how is it possible that this sector in this 2-week period here gained 3% of its value, or increased by value of 3%? And then how is it possible that within a few days later, it gave it all back? And the only way that this is understandable is if you look at it through the psychological aspect of it. All right, well, I don't care what the valuation is. I don't care what the price to earnings ratio is. I don't care what the price to sales ratio is. What I care is, oh, look at that. There were people who sold back there who are going to try to be buying their shares back. So just say, theoretically, I went short up here. What would my target be? Oh, the former bottom. Remember, we look at former bottoms and former tops for resistance and support. Now, say we were to rally, and I mean, we want to get there. It would probably take a month or two to get there. I would be looking for resistance right around here, right around 109. How is it possible that this thing makes a turn at such a round number, 109? Why is it not 109.15 or 108.74? And that's our psychological aspect. People like to sell at nice round levels. So I mean, I don't know. I guess it's because I'm a chart guy, but I think a lot of people take it for granted. And I think that the traditional mindset of like buy and hold, that's good for some people, for people that really can't watch the markets every day. But there's this whole kind of myth that's like, oh, you can't outtime the market. And it's like, yeah, you can. You just got to know what to look at. And you're not going to be able to outtime it if you're just listening to what people on CNBC are saying or on Bloomberg are saying. Notice how everyone on Bloomberg has a British accent. I guess they
I have
figure,
noticed.
huh?
I have noticed that.
I guess they figure it makes them sound smart. I don't know, man. Seems like some kind of profile to me. But anyway,
It is.
we get to resistance. Yeah, I mean, it's Bloomberg is in New York. The Bloomberg building is, you go in there, man, and it's like a friggin' spaceship. It's like so futuristic. It's really, I mean, I don't know if they have tourist visits there, but if you ever go to New York City and you can get into the Bloomberg building, you should check it out.
They got some
Like,
stuff to fix before I come back. That place used to be awesome. I used to love to go to Little Italy. I had this little place I would go get cannolis from because I like to go down the street and haggle with the vendors up and down the street there. God, I love that place. And now I wouldn't go back for a while.
Yeah. Well, Little Italy's gotten too touristy.
Is it?
But the city is just a disaster, man. And now we got all this stuff with the migrant crisis. Even the mayor is like, now it's like complaining.
Yeah, it's been a long time since I've been there.
There's people all over the streets. There's a lot of crime. When I worked in Rockefeller Center, I never felt unsafe. You never saw anything bad going on. I mean, you just didn't. Maybe once in a blue moon there'd be someone who was like on drugs, but there were cops everywhere. Now you go down there and it's like a friggin' homeless camp. There's like tent cities everywhere, and it's really it's really a shame. And now it's like it's finally catching up with these people. Like, do you know that they're cutting the police and the fire department's funding to use the money to pay for the immigrant crisis? So because a lot of cops, a lot of the way it works in a lot of unions is that you get your pension based on your last year of how much you made. So when you're in your last year, you just work 24/7. You work as much overtime as you can get, and so forth and so on. So anyway, they cut back the overtime pay. So a lot of the guys are retiring. So yeah, so it's just this whole concept of like, oh, the honesty policy, and it's like we don't need police. It's just a it's just a blatant misunderstanding of human nature. If there are no police, guess who's going to run the show? Who's ever the most aggressive and ruthless, right? I mean, that's eventually what's going to happen. Yep. But look down here, right? So 97 up here, we got 103. But it's a shame because New York is a great city, and now it's like people that live there are afraid to kind of even go out.
Well, the valuation is what really sucks, is that once you allow that to happen around these high-end businesses, you're dropping the valuation on the tax side so bad because you've turned it into a dump right next door to Saks Fifth Avenue. You know what I mean? So it's I don't know. I don't know how they can justify it monetarily wise as a city and keep taxing the people to death and then keep doing this. I watched a lot of New Yorkers yesterday on the street talking about it, and there's not a single soul in New York that's happy about this.
No, and it's really getting, it's so expensive. And I mean, it's ridiculous. These little apartments go for a couple $1,000s a month.
Yeah.
And it's like you get like a little box.
Yeah, shoebox. And happy to find it.
Yeah, when I was down there, I never worried about anything. Now it's like, if I were going to go down there, I don't know if I'd bring my gun, but I'd bring my mace. Oh, look at this. Looks like oil could be breaking out now and potentially ready to move higher. So this could be, and this is another pattern I don't really speak too much about, is the old flag pattern. And again, It's just, I think it's more important to understand what it is that this is showing about supply and demand than to just be like, oh, this is this pattern or this is that pattern. But the idea is that with the flag pattern is that it's a break in the trend. So these people are buying it and they're pushing it higher and higher and higher. And eventually some of them say, you know, this is kind of getting ahead of itself here. Let's step away for a little bit and see if the market comes in, see if the price goes lower, and then we can buy at a lower price. So they step away, and as a result, you get lower volume. So notice how we get this kind of increasing volume here on the move up. Then we get a lower volume, a little, not drastically lower, but definitely on the lower than average side. And now this is today, so we'll see by the end of today where this is. If it's up, back up to here, that'll show that these buyers who stepped aside are now coming back into the market.
Yeah.
And what would my target be here? It would be a former peak right around 93. So that's only another $5.
And that's a good point too, Kyle, is that it's more about policy in these places than it is about the actual police. The police are going to do whatever their policy and their sheriff tells them to do. So if the policy is set to allow criminals to run around and do whatever, the police are going to tiptoe through the neighborhoods or not go into them, period. It's like in Oakland where they gave
why arrest someone if you know they're going to be back out on the street in the next couple hours?
Or he's going to kill you if you go up there and say, hey, man, what are you doing in this neighborhood? He just pulls out a gun and he kills you for no reason, just because he needed to today. It's weird.
There was probably, I don't know, maybe 5 or 6 months ago, there was a film of this guy beating up this female police officer up at the 125th Street station there in Harlem, in the subway station. So the guy's like beating on her, and eventually some other cops come and restrain the guy. But this dude that was beating on a cop got released like this very same night. And then like 2 or 3 days later, they were involved in a murder. It's like, you beat up a cop. It's like, you should go to jail. It's just that simple. I mean, I'm sure back in the Roman days, if they had police, if you if you mess with one of those guys, you probably have some real issues. But you can't have, it's not a Star Trek episode. It's like you can't have a society if you don't have an understanding of human nature
and morality.
Right? I mean, I'll bet you now, one of we're talking now about all this theft and all this shoplifting. And I think part of it is that people know they're not going to get in trouble. But the other part is that stuff is so expensive. It's like, why am I going to pay $3 for this bottle of water when I could just walk out the door with it? Did
any of that theft ever show up on these balance sheets when the quarters came around? I never noticed if we had a big drop in retail because of the theft.
Yeah, it shows up in what we would call the shrink.
Right.
Let's see. Oops. I'll just see real quick if I could find it. I don't know. I don't know where it would be, but they do. It is something you talk about. So shrink isn't just things that got stolen. It could also be it's things that are unaccounted for. So maybe if something got mislabeled or they put the wrong price tag on it. So let's just see here. Press release, presentation. This is just Walmart. I mean, it's something that they don't really want to talk about because it makes them look bad. So they might kind of bury it in here somewhere, or it might not even be in here.
Yeah, I know the concept of shrink because I was in the gas station and convenience store business. But what I'm talking about as far as on the broad market, I haven't really seen all this theft showing up in the numbers of the retailers. Is what I'm trying to say, because the retailers aren't being beat down.
Well, some of them are talking about it. Like I think Dollar General did, or it was either Dollar General or Dollar Tree.
But it's not Dollar Trees that they're running in and ransacking. I mean, they might be doing it out west in the bigger cities, but where they're going in and stealing like these $10,000 purses and all this other stuff, are those all publicly traded companies, or are they usually private companies that are that big like that with like Saks and that kind of stuff?
Yeah, I mean, I think if you're a looter, I don't think you probably really care, but But yeah, I mean, it's got to be in here somewhere. They're like obligated. I mean, I'm not going to go through this whole statement.
Yeah. No, I understand that.
But it's in there somewhere. And most of the theft, at least back when I was a security guard, when I was in college, is not people coming in and shoplifting. It's actually the employees.
Oh yeah.
That steal stuff. Like when we used to go audit stores, we would enter through the loading dock. We wouldn't come in the front door, and we didn't tell them that we were coming. But you would go into the loading dock because that's where a lot of the stuff gets stolen from. So it was just kind of like, oh, surprise, we're here. Or, oh, what are these 10 coats laying over here with no price tags on them doing? Right. So anyway, all right. Well, I'm gonna get going because I got I got another call I got to do here. But I guess thanks a lot, everyone, and we will see you all tomorrow if you don't have any final questions.
Listen, guys, have a wonderful day. Thank you for joining us, and we appreciate you coming by and spending some time with us every morning. We hope we're giving you something valuable out of it. Have a lovely day.